Good morning. 5:26 a.m. Pacific Standard Time. The date is 9/22, 2011. With a monster gap down, could possibly be even a capitulation gap down on the opening bell. The Dow futures are down 227 right now. Thing I like is that Brent crude is also down $3 oil gallon. The thing about the Nasdaq futures, we're down 55 handles at one time, and they're running around 45 and 50 for this left elbow gap down this morning here at MMT market makers are ready. Apple Computer was one that hit 404 earlier and was already people were trying to get in there, and it's at 407 right now. But right when the pre-market opened, because it's pre-market futures and it's pre-market trade management now before the opening bell, and it's very important. If I were you, I would take the time to listen and validate. But just remember, let's keep the context in its reality. And the reality is here and now, buyers and sellers are going to be involved in a very emotional opening bell, and rightfully so. Because when I show you some of the gap downs like Priceline, negative gap ratio 9.27, all alert bulletin, Google at an 8.6 negative ratio. ISRG, we're market makers on it, minus 8.36. Apple right now only happens to be minus 5.18 negative ratio. And then look at the bull. It's tracking right along here. See, there's Apple. Here, there's the bull. TQQQ bull. And I went over a bull tech and bear tech charts last night. I did. And I showed them to you. And how a bear puts in a multi-week base, and how the bull was putting in the volatility reversal tops all the way down, and how we can come down in that S&P, break that 1100 this morning. If we do, then we start getting down into the brain where I've already showed my MMTs. And I've got those live postings for you to go back to and listen to those numbers. And if we were to break, plan A scenario would be that you break those lows, as we said, then you would come down lower at the first intraday low. Like, let's say the S&P got to 1085. And at that point, at 1085, which would be past number one at that price action level, then you would look for an immediate wind off the bottom, ascending in values. And it's going to be where these lower price action support levels hold, based on the fear factor of the opening bell public model thinkers that will be involved in the transactional tape, in the buy and sell. And that is where the 4th of July will happen. And once those people go through their little misfit ways, you'll come in and buy it as a market maker, take it higher, take the yield out of the trade, cash it in, get net short on the way back down, understanding where today's gap in individual equities will hold that lower delta line. And I would be looking at deltas at, once again, I always tell people, 1, 1.5, 2, 2.5, and 3. All the way down from 1 to 3. And I would load my price alarms from those numbers in my platform. And I would be ready. And you have exactly 59 minutes to the opening bell. Weekly jobless claims just came out, by the way. It's 5:31 a.m., 9/22, 2011. Market opens in 59 pennies, 59 minutes. The gap down ratio, they're going to take all the money out of the call side of the market in the volatility. They're going to come back to your put side of the market. We've been covering both sides of the market very, very, very nicely because we have. And I've got a 520 call over here on Google that I like. I'm even looking at the 540 over here. I'm even looking at uh, this $400 call on Apple that had a closing print of $24.25 ratio. And how am I going to get that wholesale price below the market on the opening bell? And once I do get that entry at that wholesale market maker price, I am a seller to the public because that is what my job is to buy wholesale and retail and know where these prices are going to be. And we need to start setting alarms on that $400 call right now at 12.5 by 13.20, and we need to set another one at 13.80 by 14.40. Then you need a 14.80 by 15.60, which would be below the market, which it will be on it. But the lower end price is that once the equity opens up at that opening bell is the fear factor. The fear level has to capitulate to the upside. That's when you'll make a bottom. And that's when you'll make a bottom with the public and you know, stocks will go down, but you got to be a buyer to be always the seller. That's what you do. And this is pre-market action, and it's a high volatility tape, MMTs. And after being through many, many years of these, 1.00 ratio, it's as long as day. Right here and now. 5:34 a.m., 9/22/2011. And it's a very nice morning because we get to take advantage of when them sellers are all out of the way. You'll have a market maker entry and you'll go up. But just remember, they can go right up to 3 to 5 teenies off the bottom, and maybe they don't get past 3 teenies up in your platform, and then they roll right over. You'd have to be a seller, sell short again. So your upside premium to your market maker entry, your yield, you know, your profit debits. So we can relate to it that way. Profit debits is if the profit debits are there, but they're not. If the market is still weak and the sellers are really still in there, you're only going to get so much movement. And you'll have to be very, 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 very alert to getting to that clearing off of the bottom when it's time. You want a teeny and a half confirmation with a previous bar at the half bar bid price. It hits it and then it bounces. You've seen what a strong market looks like, but you also knew that we ended the bull move was over 2 days ago. And today is day 4 of the 5th day, and we had last week a triple witch. Indexes and everything, that was a 5-day rally up, and I said that was going to give it all back. I told you it was going to give it all back. Because why? We missed one element. We missed a blow off top in the VIX, the fear indicator. We were missing that component. The other part of the component was a blow off bottom and get below 30 on the VIX, and we could never do that. And that the VIX, the fear level indicator, your barometer there, was in a range just as the first calendar yearly low. And what calendar year is it? 2011. And what date is it? 9/22. 2011. And if you go back in the middle of the calendar year on the SMF website, you would know that we told people then that these things can end up in a bad way. And if people don't have the risk management tools needed and understanding the markets, they can be involved. So they're involved. The public is involved in this morning. And you can see the price line ratio is now 13.28. And Google is going down to 9 points. So you can see your ratios. Okay, you can see that Apple has rolled back over, but they were buying this and selling this between 404 and some change to 407 and some change. Long, take it up, and short, back down. Back to these calls right here, there's another potential market, and that potential market, because it's a 1022 400. It's not the one that expires tomorrow. Why is that? We will be looking at that one, and we will be putting that one right here. I will get it for the MMTs right now. And this one right here, right now, is one that expires tomorrow. And the public is going to get taken to the woodshed because these $400 calls were $23.90, and they are going to open up. You set your alarms down there right now. You start setting alarms at $3.30 by $3.70. Yes, you do that. And then you put another alarm alert out there at $4.30 by $4.70. Then you make a market at $5.10 by $5.50 on that end of it. But let it be known that you'll probably open below the 640 mark and go down in those directions. The key is how much premium. The value of it is that the bull is getting taken to the woodshed. Granted, when we started out the week on Monday, Apple capitulated on an opening bell to $3.95. I think it was that date, and I stand to be corrected now. So don't hold it against me. But as I believe it was, $3.95 on the bottom, and we went straight up through that delta chain because it was on a weekend that I did the Apple analysis, and it's coming back down to where its original breakout to the last highs were, and now it's time to apply risk management because that ratio was 395 on the last capitulation opening bell in futures. And the thing about it is that the risk management need to be addressed. Trade management is to set the alarms there. I'm also going to tell one other MMT to get down below the market, put $1.60 by $2.10 and just keep it down there. And let me know when it hits it. Now, left ratio, elbow gap down. That's the ratio. And you can see Google now is selling off even more. And I like this 520 call over here. So start setting alarms at 1020 by 1080. And let's get down below that market. Let's get down below that market at 7.5 by 810. On that 520 call on a 9/23/2011 contract. And let's get those alarms down in there. You got some bids that could come into play right around 940 by 980. All right, and that's the one that expires tomorrow. And Google closed at 539, and we sold our calls yesterday. Oh, yes, we did, MMTs. That same $600 call that I was talking about, I will give you bids off the video. And let's get ready to make a market with the public fear and whatnot. When you hit that bottom, if there is a capitulation, it will happen in the first 20 minutes. Everything would start winding rapidly, just burning the clutch. Should that be the case, be ready. That's one of our trade management scenarios, as we all know. But the problem is, you got to make sure that the fear level had peaked and is reversing, because when the fear level comes down from its peak on the opening, then stocks will be putting in that left elbow 3 teenies to 5 teenies off the bottom, and then they roll back over. Let's see, after everyone was chasing these markets that I said last week, people were chasing performance and that they were going to get their head caved in, and this is it. This is what I'm talking about, and here's the evidence to it, MMTs. And let the truth be the discovery, and let discovery and the real truth be the real truth. And the truth of it is right here, right now. The price is the truth. And those people were chasing that last performance, which drove that S&P up to 1220 reversal. And now that opening of 1101, 1126, remember, just as I have said, on that S&P, just remember where your last 3 daily original calendar year lows were at the half bars. If we start to sell below those, then we're going to break that 1100. But if we come down rather and we hit right there and there's a big buy side tape there, then you're going to bounce. It's going to be very crucial on this opening bell this morning. The Dow futures are down 268. Nasdaq futures are down 53.50. They've been increasing. The Dow futures. Gold. How about that? Down $68. They're getting taken to the woodshed. We talked about why I was shorting that gold. Like any market, it's too overbought. It needs to pull back, and then people will come back into it. FTSE 100 down 256. Things are not good in Europe. Oh boy. But the thing I love is that those oil prices. And let us not forget the Chinese PMI. Take a look at that. And Dow futures are down 266. That's 2.42% negative ratio gap down. Nasdaq is minus right now 2.38 delta percent negative. And gold is negative 3.89 delta. And the CAC is down 5.5%, and the DAX is down 4.92% ratio. FTSE 100 minus 4.92 delta. And then the euro is at 1.3409, euro negative 1 point and some change there. And S&P is negative 2.77 delta, down 32 handles. All futures, Dow futures, 2.5 negative delta gap down. So we're going to gap down there in those negative deltas in your application. And it's important that once they find that price adjustment, then you'll start your actual trading ranges from the pre-market to the opening bell to the public fear factor. And how is the public fear factor? If we stay elevated in fear, you're not going to get a whole lot of movement. You're just going to get a couple of teenies off the bottom and at various different stages in price action. So, welcome to this morning at 5:40 a.m. Pacific Standard Time. How to steal the price from the market, other market makers around the world. And how do you take advantage, and why people are getting to the woodshed, and why we said the run was over. But we also said that people who chased that performance, that were underperforming the S&P 500, which they did, which contributed in a triple witch just last week. And that 5-day up-day cycle would be the reversal cycle, and the people who chased that performance would end up worse than where their original were chasing the dragon. We talked about that yesterday, people who do that, and they get stuff like this today. The people that chase the dragon, this is what they get. Boy, the ratio gap down is increasing. Anyway, look at here. It's starting way down here at Amgen. I mean, look at the negative ratio delta gap down based on index futures, based on lots of things. And look at it here. The fear factor, Google's down 12.81. The fear factor must play. And once that fear factor has capitulated to the upside, and this capitulates to the downside, and the public sells out at the bottom, then we'll start making a market MMTs.